It's Friday, end of a crazy week. First Republic Bank bailed out by JP Morgan, Citi and another big bank. Credit Suisse bailed out. Markets took off. Bond yields are through the floor. It looks like either we're getting a recession or the Fed will be too frightened to raise interest rates again for fear of destroying the banking system. I just can't believe it. We've got unemployment at a 50-year low, inflation sticking around 6%, retail sales doing all right. So the consumer is continuing on as if nothing's happened to interest rates, really, whereas the banking system is crumbling from higher interest rates. The housing market certainly a lot weaker. I don't know what the Fed are going to do. They can't cut, but they can't let inflation loose because that will destroy the economy for years to come. I really don't know what happens next. Okay, stock markets went through the roof. Right now, the Fed put is back in play. So the bank will not let anybody fail. They won't let anyone lose any money. They'll just print more. So silver is holding steady. We had a support level down at 2150, 2140. That was perfect. We've bounced right off that. Gold, I suggested, would probably start to trade sideways. We're getting overbought. We have a negative divergence on the 4-hour chart. I don't have a sell signal. I wouldn't be getting short. There's no negative pattern here. And we do still have strong support around the 1910, 1905 area, which worked so well on Wednesday. Wouldn't be surprised to see some more sideways action into the weekend, as long as we don't have any unexpected banking system news out today. Sticking with commodities, WTI crude is making a lot of sense. We broke out of that consolidation pattern that had gone on for months. We crumbled down to the big support level that I showed you yesterday on the longer term charts. We've bounced off there twice now. We've got a bullish engulfing candle here on the 1-hour chart on the first dip, and we've got a bullish engulfing candle on the second dip, which is now a double bottom with 2 bullish candles on each low. So that does indicate to me that the low is in for oil. We held the first 23.6% fib, as you see here. We've got a trend line, very, very short-term trend line, only a few days old, also at that first resistance, which is around 69.00, 69.50. We closed the week above 69.50. That's going to look more positive for next week. And with that double bottom at the major long-term support that you can see on the weekly chart, I would say that oil is about to stage a good recovery. Some of the end pairs, I was suggesting a buy at some also very longer term support that I'd shown you on the weekly chart lately, or yesterday I showed it to you. New Zealand dollar yen, the buying opportunity at 81.85, 81.35. That worked really nicely. Look at that 4-hour chart. Big bullish engulfing candle took out the previous 2 candles and off we go. So it looks very strong for the New Zealand dollar versus Japanese yen. Happy with that buy opportunity, probably worth holding. CAD yen, similar situation, bang on the support level, bounced off it, triple bottom on the hourly chart. We don't have the bullish candles that I would have liked to have seen on each bounce, but still, we are definitely pushing up. And the Aussie yen, we have longs at the 15-year trend line and the 100-week plus the 500-day moving average at around the 87.90, 87.80 area, and they are working quite nicely. Note the double bottom buy signal on the 1-hour chart is my note on the screen, and you can see that there. Okay, if you are a subscriber, then you have all the levels for today on the trade sheet, which I have here. If you're not a subscriber, you're really missing out because you're not getting these trade levels every day. So I suggest you go to my website, have a look, sign up over the weekend, and start making some money with me next week.